This MoneyControl live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, another day of red on the screen, right? We saw the Nifty, in fact, ending lower by about 0.5%, almost 0.5% or so. But we did manage to defend that 23,600 mark on the downside. It's the RBI policy.
Yeah.
There's caution ahead of that. If there is a rate cut, it would be the first rate cut in 5 years. And quite a few factors at play, right? We have a new governor
Correct.
at the helm, and we have the first policy of 2025, first policy post budget, and there have been quite a few nudges coming in from the government as well when it comes to rate cut. So let's see whether or not that happens or not. But yes, clearly caution ahead of that, and of course there was some bit of volatility on weekly expiry day as well. So yes, we did see the Nifty and Sensex shed somewhere around 0.3% or 0.5% or thereabouts, but the Nifty mid cap index, Yatin, came under renewed selling pressure, almost 1.5% kind of a cut coming in there. So the broader end of the market's on the back foot once again, and the advanced decline ratio also in favor of laggards, almost 1:1, but tilted in favor of laggards. Bank Nifty, Yatin, managed to hold out slim gains, but it did end the day in the green. But the other rate sensitives like autos and realty were clearly under pressure. The realty index, in fact, shedding somewhere around 2% or thereabouts. Talk about some of the other laggards, metals and FMCG names. They were among the laggards. FMCG, once again, a renewed selling pressure coming in. IT and pharma, these held out. There was guidance from Cognizant because of that. IT stocks held out, and even pharma, that was the flavor today. If you look at some of the buzzers in the broader end of the markets, you'll see a lot of pharma names, also emerging as volume buzzers today. We'll talk about that. But in terms of individual movers, on the Nifty, you had the likes of Cipla, top Nifty gainer. Aside of that, you had Adani Ports, Infosys, HDFC Life, and even Tata Consumer held out. On the flip side, earnings reactions coming in and, pouring in thick and fast, right?
Yeah.
Trent, look at that stock, Yatin. Another 8% down. And Trent, of course, as we all know, was a showstopper in 2024. But ever since 2025 started, hasn't really been a very fashionable move, when it comes to Trent. In a matter of 2-3 sessions, the stock has once again shaved off 15%. We'll talk about that later. But other losers were Bharat Electronics, Airtel, Titan, NTPC, ONGC, these were some of the laggards. But Yatin, as I was mentioning, some of these pharma names, they were volume buzzers as well. And the top gainer of the Nifty 500 was GSK.
Yeah. So if you look at the overall markets today, as you were mentioning, 1.5% cut coming in for the mid cap index. Also, the small cap index was under pressure. In fact, you have the small cap index falling by nearly 50 plus points and mid cap index falling by nearly 700 points. Advanced decline ratio, however, was almost manageable at 1:1 or probably 2:3 in that range. When it comes to the Nifty 500 stocks like Castrol continue to gain, another 8% up for that stock. Remember, post numbers, the stock went up 10% yesterday, and today also the stock has seen some good momentum. Eris, Life, again, here also we have seen a good momentum yesterday. Today also continuing that gain, 8% higher for that one as well. JK Lakshmi and Reddington post good numbers, have seen a 6% uptick. What was not doing well is post-result trend, and we'll talk about it in detail. That stock fell 8% post numbers. Lodha Developers, down 5%. Phoenix Limited down, 5%. So the real estate stocks continue to, trend lower. However, stocks like Bajaj Finance as well as HDFC Bank in the large cap space have been doing well. Stocks like Laurus Laboratories and Bajaj Finance, as I mentioned earlier, clearly, bucking the trend, and stocks at 52-week high. However, post numbers, MRF was down 2%, hitting that 52-week low. So, pressure continues on that particular auto ancillary stroke tire company.
That's true, Yatin. And those were some of the laggards and movers from the broader end of the markets. But, a lot of result reactions coming in. And today being an earnings heavy day, we saw quite a few stocks reacting to the numbers, the likes of SBI. You, of course, will talk about it. And Trent, Trent has been one stock that has been the most talked about stock this year, right? Just yesterday or a couple of days ago, we were talking about how Shein's re-entry into the Indian market, facilitated by Reliance Retail, could be a pain point for Trent going forward. And because of that, the stock did see quite a lot of sell-off. But today, once again, after the numbers, it resumed its downward move. Numbers were fairly in line with muted expectations. But what really, didn't go down very well with the street was the fact that the company has said that it will be consolidating or pursuing a store portfolio optimization agenda. Now this means that the company will be upgrading or consolidating its smaller footprint stores with newer stores in more attractive micro markets, and this will come at a cost, but the company hasn't really specified the potential capex that it will involve, or the cost that the company will really have to incur to facilitate or to really go ahead with this upgradation plan. I think this is something that weighed
Yes.
in on sentiment. The company has said that store aesthetics and customer experience, these are some factors that are of utmost importance to them. So this optimization plan and the kind of cost that it will involve, these are some of the things that weighed in on sentiment. But if you look at the numbers, expectations were fairly muted this time, and it has largely met those expectations. Look at the profit, rose somewhere around 34% on a YY basis. Revenue as well rose by the same amount, same quantum rather, 34% or thereabouts. But margins were largely flat at 18.1%. Expectations were around 18%, so it has met expectations on that front as well. The fashion business like for like growth was in high single digits, but mind you, last year it was in double digits. That's another factor that could have weighed in. Food and grocery segment like for like growth slowed to 10% vis-a-vis 24% on a YY basis. So significant amount of slowdown there as well. But the revenue in this segment was fairly upbeat. In fact, it rose quite sharply. The company in fact has 850 large box fashion stores, and now it has presence in 201 cities. It opened 14 West Side stores and 62 Zudio stores in the third quarter. And as of third quarter, it has 238 West Side stores and 635 Zudio stores. And it has 34 stores across other lifestyle concepts. And these, of course, as of December 2024. Of course, aside of that, if you look at the other positives, the star business has seen a growth of 25% and double-digit like-for-like growth. And emerging categories, including beauty and personal care, innerwear, as well as footwear, have continued to gain traction. In fact, these segments have contributed 20% to the revenue growth. Just want to point out what Goldman Sachs had said yesterday. They had come out with a note wherein they had reiterated their buy call on the stock, and they have a target price of 8,300 on the stock, which implies a 40% potential upside from here. And they've also said that Zudio has the potential to gain market share, although Shein's re-entry was seen as a big negative, but they are saying that the competitive risk is low, given the fact that any new competitor will take time to scale up, and it will happen only gradually and not be a disruptive force at the current juncture. But I think Shein would only be an online portfolio, online portal, right? And that way, I think Zudio, experts say that Zudio has an advantage because it has offline presence, and it has also expanded its footprint in a lot of other cities. And Goldman Sachs, in fact, has advised investors to use the recent weakness to buy the stock. So yes, there are concerns, but now Shein is a concern. Maybe over the long term, but for now, is that store optimization plan and the kind of cost it would involve. Street will really be watching out for that.
Absolutely. And, I think, Nandita, the story of Trent was growth.
Hmm.
Growth has moderated, but, it is not tremendously slowed. To all credit, they're still growing at, 35% plus. However, the store optimization would mean that they would, shut stores which are less profitable, have lower footfalls, or probably stores which have, a smaller area, but, they now demand a better real estate in terms of size and in terms of location. Also, they are planning to refurbish a lot of stores, because that aesthetic, look of a typical, store should also be there, is, what the press release said. So, yes, there could be some cost involved in the short term. They might consolidate the number of stores in the short term. Margins might remain, range bound due to that phenomenon, and that is what the market didn't like. Stock, however, from levels of nearly 7,800, if I'm right, has been falling. So the stock has already corrected a bit. Today post numbers, we saw some panic selling, 8%, almost days low for the stock of Trent.
That's true, Yatin. And SBI, the big one that reported earnings, I believe margins came in at a 30-quarter low.
Yeah, so there were pressures. The adjustment, however, the management would like to talk about, because this was one quarter wherein the treasury gains have collapsed. Typically, the treasury income for SBI almost 5,000 crores a quarter. This time it was less than 1,000 crores in 3 digits. Most importantly, the net interest margins came in at less than 3.1%. That was the estimate. Uh, However, if you look at the foreign loans, what kind of a mark-to-market change, has happened, what kind of impact have we seen on the margins is something we'll watch out for. Whether or not, the margin can bounce back from here is something that we'll talk about, because the analyst call will start at 6 p.m. today. However, the net profit came in at close to 16,900 crores versus our pool of nearly 16,000, 700 odd crores. So it was broadly in line with expectations. Net interest income also came in at 41,500 crores, broadly in line with expectations. Asset quality improved. The gross NPA stood at 2.07% versus a level of 2.13% sequentially. So a good improvement there. And if you look at the net interest income, that saw a growth of nearly 4%. Clearly, the credit cost rose slightly. However, slippages fell sequentially. The slippage number came at 41,046 crores versus 4951. So there was an improvement, despite the fact that agri-related pain and stress remains higher. MFI business is slightly under stress. However, the management said that they are not looking at any kind of pain in the corporate loans or personal loans, especially in the home loans at this point in time. So the asset quality is not a concern. However, with the rate cut, the speed of transmission is something that will determine the margins as well as the transmission of lower interest rates moving forward. So I think ahead of the RBI policy, also some profit taking in the shares of SBI was seen.
That's true, Yatin. A lot is riding on tomorrow's policy. We'll see how, what kind of commentary also comes in from the governor. Also surrounding the credit deposit ratio, right? I mean, I think that's what some bankers would really be watching out for. But the other stock that was reacting to earnings and, very unappetizing day, so to say, was for Swiggy. The stock came under intense selling pressure after numbers. In fact, it has dropped below the IPO price of 390 rupees as well, record low. You can say that on the stock. 10% in just 2 days. That's the kind of sell-off we've seen on the stock. From highs of 617, the stock has shaved off 40%. Numbers came out yesterday, and food delivery segment has done well, but it was the pain in the quick commerce segment that really weighed in on the sentiment. In fact, its third quarter loss widened, hurt by the expansion costs to counter rivals like Zomato and Zepto in the quick commerce segment. But if you look at the food delivery segment, reported a good 19.2% YOY rise in the gross order value, and that was fueled by growing transacting user base as well as increased order frequency. But let's talk about the quick commerce wars. They are intensifying. We have the likes of Swiggy, Blinkit, Zepto, all looking to deliver products in less than 10 minutes, and for that, they are aggressively opening dark stores for such orders or warehouses. You can say that. Swiggy, in fact, has added 90 stores in January alone. That's the kind of massive expansion they have undertaken to, get ahead of one another. And that's weighing, of course, on margins, clearly visible. And this pressure, according to Street or according to analysts, is expected to continue into the next quarter as well. Let's take a look at what the analyst community is really saying about Swiggy then. CLSA, I think, they have a high target price on the stock at 750 rupees. They have maintained the outperform call. And they've noted the fact that food delivery business has done well, but it's the quick commerce end of the business that has seen a bump in the road. In fact, they've also said that quick commerce gross order value, although has beaten estimates, it's the contribution margin that has disappointed. Food delivery growth, according to CLSA, has done well, driven by Bolt, which is the 10-minute food delivery service that delivers food from restaurants as well as QSRs. Dark store expansion and city expansion also continues for Swiggy. And of course, that also, impacts margins because there is a cost involved there. Bernstein, on the other hand, has an outperform call. Target price here has been cut to 575 from 635 rupees earlier. They've also said that it's a game of two halves. Food delivery is exciting. Quick commerce, not so much. You have to wait it out here because a lot is happening in this space. With the entry of new players, old ones, pressing the pedal on investment when it comes to dark stores as well. Here on, of course, the trajectory will only depend on how quick commerce really pans out. But for now, we have seen target cuts coming in on Swiggy. I think barring a CLSA, which has a 750 rupee target on the stock.
But today, Nandita,
Hmm.
unfortunately, the stock dipped below not only the IPO price,
Hmm.
but the IPO day low.
Hmm.
So it's below that IPO day low as well. Technically, if you talk about something that analysts tell me that not a great sign,
Hmm.
especially in a time wherein quick commerce companies are witnessing some sell off because of the aggressive QSR
Yeah.
or the quick commerce
Commerce.
space,
Hmm.
not QSR. But the quick commerce ramp up is something that the market sees as a cash burner for at least next 12 months. So, with rapid expansion and rapid dark store addition, probably, competition also moving higher would squeeze in the margins. That is the reason why there are concerns over all of these stocks. Zomato also clearly, off highs
Hmm.
along with Swiggy, almost 7% down in trade.
Well, that's true. It's also our affinity to get products within a stipulated time, and
Hmm.
that's what these quick commerce companies are also doing, racing against time to
Yes.
deliver products, and that's how their margins are also getting squeezed. But I think those were all the stocks that were on our radar this afternoon. Tomorrow is a big day. We'll be getting you live coverage of the RBI policy. We'll be getting you a battery of experts to decode the governor's comments as well, post 10:30. So don't forget to tune in for that. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in, and stay tuned to Money Control for all your other news and updates.